Good morning, everybody. Happy Monday. It's March 18th, 2024. Great to meet all of you today. My name is Bob Lang, and it's time for our daily bites. We bring these to you every Monday and Thursday, roughly around 8:30, 8:45 in the morning. Today we have a short, brief program for you today, but I wanted to come at you. We didn't have a daily bites last Monday. I was traveling, but came back and we had a good daily bites on Thursday. So let's talk a little bit about the markets here. And we can see this morning, nice strong bid in the market today. We see some technology names starting to move higher. We have the S&P 500 up about 0.75%. The Nasdaq up more than 1% today. 18,273. We looked like we were going to break 18,000 after a very poor day on Friday, but markets are bouncing back today. The Dow Industrial's up a little bit as well. So let's take a look about the overall market over here. Look, basically right now we're heading into a seasonally weak period. Right now, is that meaningful? Well, sure it is, right? We have periods of seasonality that are stronger than others during the year and others times that are weaker. And then we're kind of in a weaker period right now. We're following a large expiration, which was on Friday. So if some people got some stock handed to them on Friday, if they held some options into the expiration and they got exercised, well, they're going to be dumping those shares, their shares today. If they avoided that, then this is an opportunity for them to probably pick up some bargains if stocks do come down. But as of right now, we're seeing some strength in, say, names like Apple and NVIDIA. Of course, NVIDIA's got an event later on today and this week. Broadcom's up a little bit here. We see some positive news on Google. I think they're collaborating with on their AI Genesis with Apple. I think the Genesis AI may actually be put into the iPhone, which would be huge positive for Google, a blockbuster type of a deal. So, and we see some strength in Tesla this morning. So, this is we're rallying back a little bit. We had a couple of days of weakness last week. We do have a Fed meeting coming up this week. We will talk about that on Thursday. Of course, the meeting will be over. The press conference will be done. We'll be having digested the materials from the projection materials that are going to be released. Remember, new projection materials are released every quarter: March, June, September, and December. So the last one was in December. We'll have a new series of projections coming up on Wednesday at about 2 p.m. Eastern time. As it relates to the market action over here, I want to show you a chart over here. Now, this is the S&P 500, right? And if you know anything about me, I'm a pattern follower, right? I got to follow patterns. And one of these patterns that we're noticing here, you can see very clearly on the chart is every time the S&P 500 falls back to the 20-day moving average. What is the 20-day moving average here on this chart? It's this dotted line, right? It's the dotted line over here. And we've seen ever since it broke out in October, it got stretched. It bounced from here. It got stretched above up there for about a month and a half, 2 months, pulled back, got up there again, pulled back, up there again, pulled back 3-4 times, et cetera, et cetera. So this is something that, you have to pay attention to the patterns that are developed. And the longer the patterns go and the more times that it tests the thesis, the stronger that pattern is, and the more reliable it is, and the more you can rely on using that pattern to trade off of. So on Friday, we nearly tagged that 20-day moving average. Probably for some people that was close enough, and this is probably why we're bouncing a little bit today. And of course, Friday, the low on the S&P 500 was 5104. The 20-day moving average was slightly below there, but I think it was 5095. About 8 or 10 points below there. So we didn't quite get that test of there. But, lower highs, lower lows, it was a doji on Friday. And if we have a strong day today, we're going to have a chance to test resistance from last week, which was about, let's call it 5180 to 5170. 5179 was the high on the 12th. So Again, it all depends on the action today, and then maybe some follow through tomorrow. Now, we see volatility is up a little bit this morning, up 11 cents on the VIX, and the VIX futures up down about 27 cents. Now, why is it we have this discrepancy here? That is because tomorrow is the last day of trading for March volatility futures, and starting on Wednesday, April will be the front month. Now, I want to take a look at the VIX term structure with you for just a moment. VIXCentral.com shows VIX term structure, and everybody see this here. We see the VIX is almost lined up with the VIX futures, as it should. When they expire, the VIX futures expire, the VIX futures and the cash come together and they settle, and all of a sudden we become front month. And so the term structure is sloping upwards, which is in contango, and that is generally a bullish condition for the markets. But look what's happening later on in the year, back in out to October. We have this big spike in volatility. And why is that there? Well, we have a big election coming up, right? Big presidential election coming up in November, and this October future includes the time frame going into the election just before then. So it expires on October 15th. The November one is also spiking higher. We don't have that on this chart here, of course, but that is also spiking higher. And what we often see is when people, the markets and traders in the markets inflate volatility out into the future, it becomes an opportunity to sell that volatility. And what does that mean? That means when you're selling the volatility, the markets are in kind going to likely rise on that. So let's keep that in mind. And the last thing I want to show you here is the internals here on Friday. Not horrible. We see some green here in the tech sector, in the Nasdaq here towards the end of the day on Friday. A lot of red on the Nasdaq or the New York Stock Exchange down over here on the left. A little bit of a rise in a put call ratio, but a drop in volatility on the day. So that meant that if you were long puts, even if volatility was dropping and the markets were dropping as well too, you didn't see a whole lot of action on your puts. So something to keep in mind is that you want to keep some protection on, have some cash. Again, we have a lot of uncertainty coming up this week with the Fed meeting. Nobody really knows where Powell is going to be focusing his attention. It's obviously going to be on inflation for the last couple of months. Last week's inflation reports were very, very hot, and I'm sure he's probably going to be addressing those in the meeting. So that's going to be it, everyone. Have a great day. I appreciate all of you spending a little bit of time with me. Last thing I'll show you is explosiveoptions.net. The bracket challenge is back. We'll have a little bit more of that on Thursday. Keep an eye on your social media, on Twitter, on Threads, on Facebook, and LinkedIn, and so forth. I'm sending this link out everywhere to go ahead and sign up. Beat Bob Lang. There's a lot of prizes to win. First prize is a whole year of total access. It's worth $3,000. So thanks, everyone. Have a great day, and I'll see you guys all back on Thursday. Take care. Bye.